Hi, everyone. Thanks for joining Mark again in today's podcast about the oil deals through the Strait of Hormuz. As usual, one question before starting the video. What if Japan, one of America's closest allies, backstabs the United States? And whether its oil deal in Chinese RMB through the Strait of Hormuz could shake the entire global financial system? That sounds dramatic, but something like that might actually be starting to happen right now in one of the most important places on Earth, the Strait of Hormuz. Let us first translate the core idea into simple terms. There is a growing situation where Iran is effectively saying if you want your oil to pass through the Strait of Hormuz safely, you might have to pay in Chinese yuan instead of US dollars. That alone sounds like a small technical change. It is not. It could be the beginning of something much bigger. Now let us build the full picture. The Strait of Hormuz is one of the most critical choke points in the global economy. Around 20% of the world's oil passes through this narrow waterway every day. If anything disrupts that flow, oil prices spike, economies panic, and governments start making emergency decisions. That is exactly what is happening right now. Due to the escalating conflict involving Iran, the United States, and Israel, the strait has become unstable, partially restricted, and in some cases, almost shut down. Iran has even taken steps to control which ships are allowed to pass, effectively turning the strait into a controlled gateway. And here is where things get really interesting. Instead of just using military force, Iran is using economic leverage. It is leveraging geography. The Iranians control the gate, and now they are testing a new rule. If you want access, you may need to play by new financial terms. Those terms involve the Chinese yuan. It is not happening in a vacuum. China is already Iran's largest buyer, accounting for more than 80% of its crude oil exports. So from Iran's perspective, shifting toward yuan payments makes perfect sense. It strengthens ties with its biggest customer. It avoids U.S. sanctions, and it directly challenges the system that has dominated global trade for decades. That system is the petrodollar. To understand why this matters, we need to reiterate how the petrodollar system works, even though we discussed it in other recent videos. Since the 1970s, most global oil transactions have been priced and settled in U.S. dollars. That means if any country wants to buy oil, it needs dollars. So countries around the world hold large reserves of U.S. currency, even though the dollar's value has shrunk by 95% over the past decades. That creates constant global demand for dollars, and that demand gives the United States enormous power. It allows the U.S. to run large deficits, borrow cheaply, and impose financial sanctions on other countries. In simple terms, oil demand supports dollar demand, and dollar demand supports U.S. global dominance. Now imagine even a small crack in that system. If some oil starts trading in yuan instead of dollars, countries no longer need to rely solely on dollars. They begin holding yuan. They begin building alternative financial channels. And over time, the system starts to shift. That is why this Iran move matters. It is not about one deal. It is about a precedent. Now, let us bring Japan into the picture. Japan is one of the most energy-dependent countries in the world. It imports almost all its oil, and a large share of that oil comes from the Middle East. Even more importantly, around 70% of Japan's oil passes through the Strait of Hormuz. So when the strait becomes unstable, Japan is immediately under pressure. Energy shortages become a real risk. Economic slowdown becomes possible, and the government has to make difficult choices. Right now, Japan is stuck in a strategic dilemma. On the one hand, Japan is a close ally of the United States. Its security system, military cooperation, and foreign policy are deeply tied to Washington. On the other hand, Japan's economy depends heavily on stable energy imports. If Iran effectively says, "You can pass, but only under certain conditions," Japan cannot simply ignore that. So Japan faces a question. Does it stick strictly to the dollar system, risking energy shortages? Or does it quietly, perhaps partially, adapt to yuan-based transactions to secure oil flow? Even if Japan does not openly switch, even small adjustments matter, because Japan is not just any country, it is one of the largest economies in the world. If Japan even partially accepts non-dollar oil transactions, it sends a signal to the rest of Asia. And Asia is where most of the oil demand is. In fact, about 80% of oil flowing through Hormuz goes to Asian markets. So what Japan does could influence many others. Now, let's zoom out and look at China. China is playing a very strategic game here. It is not rushing into conflict. It is not sending troops. Instead, it is focusing on stability and long-term advantage. China has been pushing for years to internationalize the yuan, but that has been difficult because global trade, especially energy trade, is still dominated by the US dollar. This situation gives China an opportunity. If oil starts being traded in its currency, the Chinese yuan, even in limited cases, it gives the currency real global use, not theoretical. China is already deeply connected to Iran economically and politically. It has maintained relations, continued oil purchases, and even engaged in diplomatic efforts during the conflict. In the past few decades, China has maintained close relations with Iran, even as it was under sanctions. At the same time, China is being careful. It does not want a confrontation with the United States. It wants influence without escalation. So, instead of leading the change aggressively, it is allowing conditions to push the system in its favor naturally. That is a very different strategy from traditional power projection. Then let's look at the United States. From the US perspective, this situation is dangerous, not immediately, but structurally, because US global influence is not just about military power. It's more about financial dominance. The dollar is the backbone of that dominance. If the petrodollar system weakens, even slightly, the long-term consequences could be significant. For example, if global demand for dollars decreases, then US borrowing costs could rise. Foreign countries might buy fewer US Treasury bonds. Sanctions become less effective, and alternative financial networks begin to emerge. Right now, the US still holds a dominant position. The dollar is still the world's primary reserve currency. But what matters is direction, and the direction may be slowly shifting. Now, let us weave all of this. Iran is controlling a critical choke point. China is ready to support yuan-based trade. Japan is under pressure to secure its energy supply and agreed to pay for the oil with the Chinese yuan. And the United States is trying to maintain the existing system. It creates a very complex triangle. US-Japan relations are strong, but not without tension. The US has asked allies, including Japan, to help militarily secure the strait. But responses have been cautious. Japan has legal and political limits on military action abroad. It also does not want to unnecessarily escalate conflict. At the same time, China-Japan relations are deeply interconnected economically, even though they have been downgraded politically since November 2025. China is Japan's largest trading partner. Trade between the two countries exceeds $300 billion annually. So Japan cannot afford to ignore China either. It puts Japan in a balancing position. It must maintain its alliance with the US while managing its economic relationship with China and its energy relationship with the Middle East. And that balance is becoming harder to maintain. Now, let us return to the core question. Can a single oil deal in yuan really change the global system? The honest answer is not immediately, but it can start a chain reaction. Think of it like this. Systems like the petrodollar do not collapse overnight. They erode, slowly. First one exception, then a few more, then a pattern, then a new normal. We are possibly at the first stage. There are already signs. Some ships have reportedly paid transit-related costs in yuan. Iran is openly discussing non-dollar settlement. China is positioned to benefit, and global energy markets are under stress. All of this creates the perfect environment for experimentation. And once something works, it becomes easier to repeat. Over time, this could lead to a more multipolar financial system, where multiple currencies are used for global trade, where no single country has total dominance. That does not mean the U.S. disappears from the Middle East, but it does mean its relative power could decline. And that is the real story. Not a sudden collapse, but a gradual shift. So in the end, this is not just about oil. It is about power. It is about who sets the rules of global trade. And it is about whether the world continues to run on a single financial system or moves towards something more fragmented. And it all might be starting in a narrow stretch of water that most people never think about. So here's the question. If countries, even if it is Japan, America's economic and political colony, can buy oil without using dollars, how long before they start trading everything else the same way? It may not be tomorrow, but we don't have to wait another 10 years.